Now we have this case scenario number 11, which is on depreciation calculation. It's a big question. Mr. X has set up a manufacturing unit in Chittoor, Andhra Pradesh. This is the wrong spelling. The correct spelling is CHITTTOOR. It is pronounced as Chittoor. It is not Chittor. Chittorgarh is located in Rajasthan. Chittoor is located in Andhra Pradesh. So those who are not aware of it, they can Google it out. However, the place has no relevance. It is set up on 1st April 2021. Individual is setting up a manufacturing unit. Manufacturing unit means additional depreciation would be possible. You should underline this. Additional depreciation under section 32 subsection 1 clause 2a. For the previous year 21-22 last year and the current year 22-23, Mr. X has purchased following assets: 1, 2, 3, 4. 4 assets. Date of putting it to use. Date of put to use is 7 June 2021. Plant and machinery X for 14,75,340. This is the purchase price. 7 June 21, that means last year, and it is put to use for more than 180 days in the last year. More than 180 days, it is plant and machinery. Assessee is engaged in manufacturing. That means depreciation and additional depreciation both will be allowed. Depreciation rate will be 15%, additional depreciation rate will be 20%, but both would have been allowable last year. So in the current year, only depreciation will be allowed at the rate of 15%. Additional depreciation must have fully been allowed in the last year, financial year 21-22. Then 25th July 2021, again more than 180 days, and again last year. These two have been acquired in 21-22. 21-22. Again, this is office furniture, therefore only depreciation will be allowed at the rate of 10%. Rate of depreciation on furniture fitting is 10%. Additional depreciation is only on plant machinery, not on furniture fitting. 7,65,400. Third is 14 January 2022, again acquired in 21-22, and again it is plant and machinery. First three assets have been acquired in 21-22, but this particular asset, plant and machinery Y, has been put to use last year for less than 180 days. That means depreciation allowable last year must have been 7.5% and additional depreciation must have been 10%. In current year, what will happen? 22-23, we will get full depreciation on the WDV and we will get balance 10% additional depreciation on the original cost. Now additional depreciation 10%, 10%, whether in the current year 10% or last year, both of them would be on 5 lakh rupees. Current year's depreciation 15% will be on the WDV of the current year, WDV, but additional depreciation 10% for the current year will continue to be available on 5 lakh rupees only. 15 May 2022, that means in the current year 22-23, another asset is acquired, plant machinery Z. This is acquired in the current year and it is put to use on 15 May 2022, that means more than 180 days. Out of the four assets, only this particular plant machinery put to use on 14 January 22 is for less than 180 days. Remaining three assets are for more than 180 days in the respective year. So here depreciation will be allowable 15% and 20% additional depreciation will also be allowable on 8 lakh. 8 lakh is the cost of acquisition. He has paid professional fees of 35,000 each, 35,000 each, that is more than 30,000 each to Mr. A, Mr. B and Mr. C on 10 September 22 in the current year, credited in the books on the same day. The date on which paid, it is credited also in the books of account to discuss some legal matter related to business. Legal fees, professional fees is paid to discuss some legal matter. There will be TDS applicable on this under section 194J. TDS under section 194J is attracted at the rate of 10% provided amount paid or payable to each person exceeds 30,000 rupees. However, 194J is applicable to individuals as a payer only if last year's turnover exceeded 1 crore from business or last year's professional gross receipt exceeded 50 lakh rupees. So that will have to keep pending. We will check whether TDS is applicable to this Mr. X or not. The net profit computed in accordance with Chapter 4D. Chapter 4D means PGBP income. 4A is salary, 4B is house property, 4C was deleted, 4D is PGBP of the Income Tax Act 1961 for the previous year 21-22. Net profit for previous year 21-22 is 1.2 crore. If the net profit of last year, previous year 21-22 is 1.2 crore, that means turnover from business must be definitely be more than 1 crore. If profit is more than 1 crore, turnover has to be more than 1 crore. Therefore, in the current year, TDS will be required to be deducted. TDS will be on what amount? TDS under 194J will be on 35,000 each to Mr. A, Mr. B, Mr. C. It will be 10% of 1,05,000. This is entirely pertaining to TDS part. Now proceeding further, Mr. X has 2000 equity shares of MNO Private Limited. 2000 equity shares of MNO Private Limited. On 21st October 22, that is in the current year, MNO Private Limited has bought back 50% shares from all its shareholders amounting to 13,50,000, which were issued for 5,70,000, which includes 1,15,000 towards premium. Now this particular point is not there in your syllabus. Institute should not have asked. This is buyback tax, BBT. This is a chapter on final sale. However, we had briefly discussed this somewhere in exempt income chapter, that in the hands of Mr. X, whether this whether this amounts to capital gain or PGBP income, it will be exempt under section 1034A, provided the company MNO Limited has paid buyback tax under section 115QA, QB, QC, 115QA, 115QB, 115QC, which is a part of final CA. The tax rate applicable is 20% plus compulsory surcharge at the rate of 12% plus compulsory health and education cess at the rate of 4%. Surcharge here is mandatory, rate is fixed 12%, irrespective of the total amount paid, whether it is more than 50 lakh, more than 1 crore or less than 1 crore, come what may be, effective rate will be 23.296%. The company will have to pay this buyback tax. Buyback tax will be payable by MNO Limited. On what amount? Now this tax is payable on the excess amount paid by the company for buyback. Company has paid 13,50,000 and company had received 5,70,000. Whether this 5,70,000 comprises of premium 1,15,000 or it includes face value only or face value plus premium makes no difference. 13,50,000 minus 5,70,000 will be 7,80,000. Company will have to pay tax, buyback tax at the rate of 23.296% on 7,80,000. That is amount paid by company minus amount received by company from the shareholder. Amount paid by company to the shareholder minus amount received by company from the shareholder, whether that 5,70,000 includes any premium or not. That's it. Question is over. Based on the facts of the given case scenario, choose the most appropriate answer. Number one, what would be the amount of depreciation in respect of plant and machinery Y? Plant and machinery Y was acquired last year, 21-22. If you can see it here, plant and machinery Y, this one was acquired in 21-22. But 21-22, there would have been depreciation and additional depreciation last year at half the rate because it is put to use for less than 180 days. And current year there will be depreciation and remaining additional depreciation. What would be the amount of depreciation on machinery Y allowable as a deduction while computing income under the PGBP for the previous year 22-23? We'll have to calculate it out. Let's do one thing. Let's calculate it out for all the four assets. I have kept the format ready. Let's start with plant machinery Y. What is asked to us in the question? What is the cost? Cost, then depreciation and additional depreciation for depreciation and additional depreciation for financial year 21-22, 7.5 and 10% because put to use for less than 180. We will get WDV for last year, closing WDV of last year, which becomes opening WDV for current year. Then we will compute depreciation for previous year 22-23, where we'll have additional depreciation also because only half of the additional depreciation was claimed in 21-22. Cost of acquisition of plant machinery Y was 5 lakh rupees acquired on 4 and put to use on 14 January 22. So we'll start with 5 lakh rupees. Depreciation at the rate of 7.5% on 5 lakh will be 0.075, 37,500. 37,500 is a depreciation and additional depreciation would be 10%, 50%, 50,000. Now subtracting these two, WDV will be 4,12,500, on which for the current year we will claim depreciation. Depreciation will be at the rate of 15%, but additional depreciation will be 10%, but will not be 10% of 4,12,500. Depreciation will be 4,12,500 into 0.15 is equal to 61,875. 61,875, but additional depreciation will not be 10% of 4,12,500, will be 50,000 only. Please make a note of this. This I had explained in the class, but many of you have goofed up with this because we did not have any question on this. Additional depreciation in totality will be 20% of 5 lakh rupees. Understand? That means additional depreciation will be 5 lakh into 20%, 1 lakh. Out of 1 lakh, 50,000 is allowed last year and remaining 50,000 will be allowed in the current year. Total depreciation will be 1,11,875. Let's check whether 1,11,875 is one of the answer or not. Answer yes. Point number B, 1,11,875. Our answer is B. Let's check Institute's answer. Institute's answer is also B, 1,11,875. Now 11.2, it says what shall be the total amount of depreciation allowable as a deduction while computing PGBP income. Now total depreciation on all the assets. Let's go back to our calculation. Plant machinery X, for Y we have already computed. Plant machinery Z, and then office furniture. Office furniture will calculate separately, and then we'll take the total. Let's go back to the cost of acquisition details. Cost of acquisition of plant machinery X is 1475,340. For plant machinery Z it is 8 lakh, and for office furniture it is 765,400. Remember these details. I'm going back to the computation and jotting down these details. 1475,340 for plant machinery X, 8 lakh rupees for plant machinery Z, and 7,65,400 for office furniture. For plant machinery X, we have to compute it was acquired last year and put to use for more than 180 days. We'll have to compute depreciation 15% and additional depreciation 20%. Now here additional depreciation will be on the cost, and entire additional depreciation is covered up in financial year 21-22 itself. We can follow a shortcut. We can compute 35% for both of them combined together. 1475,340 into 0.35, 516,369. 516,369 is the total depreciation and additional depreciation on this for the last year. WDV. WDV will be 958,971. 958,971, on which we will compute depreciation. Depreciation will be 958,971 into only 15%. There won't be any additional depreciation now. 958,971 into 0.15. 143,846 will round it off to 143,846. 143,846. This is the depreciation on plant machinery X for the current year. Okay. And depreciation and additional depreciation on machinery Y is 111,875. So I'm just writing down here because we need to find total depreciation. 143,846. 111,875 for plant machinery Y. Now for plant machinery Z, cost is 8 lakh rupees, and we have to compute depreciation and additional depreciation. It was put to use for more than 180 days. That means we can follow a shortcut. We can straight away compute 35%. 8 lakh into 0.35. Last year's depreciation would have been, no, this is acquired in the current year only. Plant machinery Z was acquired in the current year. There will be additional depreciation and depreciation to 2,80,000 for the current year. This 2,80,000 is for previous year 22-23. We can just write it down here in the total 2,80,000. And now office furniture 765,400. Office furniture rate of depreciation is 10% and it was acquired last year. So financial year 22-22, 21-22, last year's depreciation would be 76,540. Subtracting 76,540, the balance WDV for last year will be 688,860. 688,860. And on this 688,860, we will compute depreciation for the current year. 688,860 into 10% will be 68,886. 68,886. This is the depreciation for current year, which I am writing down here in the total depreciation column. 68,000. The total depreciation on all the four assets for the current year will be 604, 607. You can take the total separately. 604, 607. This is the total depreciation. Total depreciation. Let's check what's institute's answer. Our answer is 604, 607. Answer number D, 604, 607. Our answer is D. Let's check what's institute's answer. Institute's answer is also 604, 607. Now 11.3, Mr. X wanted to know from you whether any tax is required to be deducted or not on the professional fees paid to Mr. A, B and C. If tax has to be deducted, and what would be the rate and what would be the amount. Okay, so here what will happen is total amount paid is 35,000 each into 3. Total amount is 1,05,000. We will have to deduct TDS under section 194J at the rate of 10% since the amount exceeds 30,000 rupees. 30,000 rupees, and tax rate is 10%, provided his last year's business turnover exceeded 1 crore. So we could, if you recollect, we had checked it out. His last year's profit itself was, net profit was 1.2 crore. That means turnover has to be more than 1 crore. Turnover was 1 crore, 1.2 crore. So profit was 1.2 crore last year. So the turnover has to be more than 1 crore. The answer is yes, he will have to deduct TDS. TDS amounting to 10,500, that is 10% on 1,05,000. D is the correct answer. First three options are incorrect. Let's check what's institute's answer. Our answer is D. Institute's answer is also D. TDS 10,500, 10% of 1,05,000. Our answer is correct. Now proceeding further with 11.4. This is the last MCQ. What will be the amount of tax payable by MNO Private Limited on buyback of its shares? Buyback tax under section 115 QA, QB, QC, which is at the rate of 23.896%, which is 20% plus compulsory surcharge, 12% plus compulsory health and education cess, 4%. Effective rate is 23.296%. 23.296% of, if you recollect, 13,50,000 amount paid by company for purchase for buying back its shares minus amount received by company 7.8 lakhs. It will be on 23.896% of 7.8 lakhs. Let's calculate it out. 7,80,000 into 0.23896. 186,388. 186 388.8 is equal to 389. They've rounded it off to well, there is a mistake in the tax rate. It should be 23.296% and not 896. So answer will be, it is 20% into 1.12, 12% into 1.04, 23.296 and not 896. My mistake. 5 lakh, sorry, 7,80,000 into 0.23296 is equal to 181,709. 181,709. They've rounded it off to, as per section 288B, they've rounded it off to 181,710. Let's check institute's answer. Our answer is B. Institute's answer is also B. With that, this case scenario comes to an end. See you in the next video. Our answer is correct. See you in the next video with case scenario 12.